Hey everybody, the time has come. Finally, all these regulators, it took a long time to get this actually done, but it's here. It's here. It's the best way to invest in gold. Look at what this is. The GoldRush Yield Fund has finally been opened. So it's for accredited investors only, and certainly past performance does not guarantee future growth or future results. So this is a private fund investing in leases and bonds denominated in gold and silver. Okay, insured gold leases historically pay 2 to 5% interest on gold annually in gold. That's the big difference here. We are compounding our growth gold on gold. So important that we understand the difference. So we're not getting paid interest, we're getting paid gold. That's cool. Gold bonds delivering returns anywhere from 8 to 19% on gold in gold annually. So these are fantastic. It's important that we know this monetary system has been going on out there for quite a long time. There's a lot of entities out there borrowing gold. Okay, some in silver, a lot less dealing in silver, but so much of the market out there borrowing in gold. Think of mining companies, jewelry stores, manufacturing, bullion, refiners, recycling. You heard about that shop over in California that somebody stole $20 million worth of gold from their safe in the back. It's amazing how much gold is in a lot of these jewelry stores. So those type of stores, that's where the leasing comes in. They've got insurance on all the gold, so the gold is safe. Even if the gold gets stolen like that, it's safe. So that's important. This is a great way to invest. Imagine being able to earn a yield on gold. That's what Warren Buffett had a problem with gold. But if you look at the history of just simply the value of gold, it is a fantastic investing category to add to your portfolio, especially larger portfolios. This is an uncorrelated asset. You should be looking always for uncorrelated assets to diversify your portfolio. So let's take a look at this. There's the S&P 500 from 2000, 5 to 2024. All right. So when you stretch it out, it doesn't look as turbulent as it has been, certainly as turbulent as it has been right now. 2008 looks like nothing right now. Look at that. It's pretty fantastic when we look at that rise of that stock market. But there's the price of gold. Price, just simply the price of gold. So if you're in those gold ETFs, paper gold as we call them, this is essentially what you did minus the fees. That's what's terrible. You're taking an attrition for the fees that you're paying in those funds. So this is GLD. This is the value of gold all the way through. It was beating the S&P 500 for a while. Certainly when 2008 happened, all the turmoil, gold did really well. And then we had a pullback in gold and now the rocket launch in gold. There's the mining stocks. A lot of people want to diversify in mining stocks, but wow, a lot more volatile than the stock market. You got to be careful with those. They do follow the general trend line, but boy, are they a wild ride. We've seen some significant ups and downs in those mining stocks. And then there's the gold earning a yield. So if you just take the spot price of gold and you add 5% to it every single year, you're going to rocket launch out of this. That compounding effect and the rising value of gold is fantastic. And people say, oh, gold's already hit its high. No, we got a long ways to go. The Chinese have a ton of U.S. treasuries that they are selling. And what are they doing with that money? They're buying gold. The countries, the central banks for all the major countries out there have been net buyers of gold for 15 plus years. So just understand this is currency, whether you like it or not. Oh, we went off the gold standard. No, this world has not gone off the gold standard. They all own lots of U.S. treasuries to bolster all the foreign currencies out there, but they also all own gold. It's pretty universal out there. So the nice thing for you from an investor perspective is no storage cost or risk, right? If you buy a big chunk of gold and you want somebody to store it, you're going to have to pay for insurance and pay for that storage, or you're going to store it at home and you've got the risk of that. Okay. So no personal transaction fees going and buying the gold. You don't have to worry about that. We buy in bulk, so we're getting way better pricing than anybody else on the street. And then professionally managed, vetted, and diversified portfolio of bonds and leases. Lots of great ones out there. Earn gold on gold, $500,000 minimum, liquidity restrictions because the leases are a year and the bonds are anywhere from a year to 5 years typically. So there's going to be liquidity restrictions typically locked up for the first year, and then there'll be some parameters for liquidity after that. 20-25% quarterly type stuff. And then accredited investors only, as always. All right, I hope that makes sense. If you want to hear more about it, certainly go to yourinvestmentcounselor.com. The actual manager of the hedge fund, you can schedule an appointment directly with him, just a meet and greet, or certainly I'm always happy to talk about it. So go to yourinvestmentcounselor.com and you can schedule a meet and greet with any of us. Our full classes, fpfeaz.org. Jump on there and sign up for some of our classes. Every month we have a different topic, and certainly give us a call if we can help out in any way. Subscribe, like, share, comment. We'll keep an eye on all of it. We're always here paying attention, and we'll see you next week. Thanks again.